You write a check for $40. Doesn't matter what for. Rent, a phone bill, a kid's school fundraiser. Your paycheck lands a day late, there isn't quite enough in the account yet, and the check bounces. Your bank charges you a fee for that. $35 maybe. Annoying, but you've heard of that one before. Almost everyone has at some point. It's practically a rite of passage for having a checking account. Then 3 days later, that same $40 check tries to go through again. It bounces again. Another fee? Then a third time. By the time it's over, you've paid over $100 in fees on a $40 payment you never actually managed to make even once. That is not a hypothetical. It is a real practice that 2 different major U.S. banks got sued over and settled in 2 separate federal court cases, and that regulators are still actively watching for today. Here's exactly how one returned payment turns into a stack of fees, why it was legal for so long, and why your own bank might not even do it anymore, even though you'd have no real way of knowing that unless you go check for yourself. Start with how this actually works, because the mechanism is simpler than it sounds. When you write a check or set up an automatic payment for something like rent, a utility bill, or a car insurance premium, and there isn't enough money in your account to cover it, the payment doesn't just vanish and reset. The company you owe, a landlord, a utility company, an insurer, can simply try running it again, sometimes a day or two later, sometimes more than once. A gym membership charge that bounces on the first of the month, for instance, often gets automatically retried a few days later by the gym's own billing system, with nobody at the gym even making a decision about it. It's just how their software works. From where you're sitting, it's the same bill, failing the same way, for the same underlying reason. Most people assume reasonably that a single failed payment is a single problem. But from a bank's side, that second attempt and the third weren't always treated as the same transaction. The industry has a word for this: representment, which just means presenting the payment again. Some banks looked at each of those retries as a brand new item in their system, separate from the first attempt, and charged a brand new fee for it, even though to you sitting on the other side of it, it was the exact same $40 bill you were already trying to pay. That's the whole mechanism. No fine print trick, no complicated formula, just the same payment, resubmitted, billed again as if the first attempt never happened. This isn't a theory. A federal class action filed against Bank of America laid out exactly how it worked inside one of the country's largest banks. According to the complaint, whenever a check came back to Bank of America a second time, after already being returned once for insufficient funds, the bank would treat it, in the plaintiff's own words, as a new and unique item subject to yet another NSF fee or overdraft fee. The case wasn't limited to paper checks either. It also covered electronic payments, flagged with a specific code, REDEP check, meaning an ACH payment that a merchant had resubmitted after it first bounced. Same $40, same bill, same underlying problem, but a second fee stacked on top of the first, whether the original payment was a physical check or a digital one. The case covered customers going back to May of 2017. Bank of America stopped charging NSF fees in February of 2022. The case, Czechia versus Bank of America, later settled for $8 million, received final court approval in September of 2023, and required the bank to continue not assessing the disputed fees for at least 5 years. For customers in the class, that meant a modest payout once the settlement was approved, a small refund on fees that, individually, were never large enough for any one person to sue over alone. That's part of why lawsuits like this take a class action to happen at all. No single $40 fee is worth fighting in court by yourself. But a few million customers charged that same fee adds up to something a law firm will take on. Bank of America wasn't the only one. A separate case against TD Bank described almost the identical pattern, the same check or electronic payment returned once, resubmitted, and charged a fresh fee each time it came back. Court records in that case show TD had actually written this into its own internal policy back in April of 2021, changing the bank's own definition of what counted as a separate item specifically, so a resubmitted payment could be billed again as something new. The class in that case stretched back even further, to 2015. That case also ended in a settlement. Two different banks, two separate lawsuits, years apart, the same underlying move. A payment fails once, and somewhere in the bank's system, the fee counter quietly resets. And this isn't just two banks' old history. The Office of the Comptroller of the Currency, the federal agency that oversees national banks, has published guidance specifically flagging repeat fees on a resubmitted check or ACH payment as a risk it's watching across the industry, not only at the two banks that already settled. The Consumer Financial Protection Bureau has gone further than guidance with at least one bank. In a July 2023 enforcement order against Bank of America, the agency found the bank had engaged in what it called double dipping, charging more than one non-sufficient funds fee on the very same transaction, and ordered the bank to refund the customers affected. The legal and regulatory pressure over this didn't stop with those cases either. As recently as 2024, a different bank, Flagstar, was defending against a nearly identical claim in federal court that it had charged multiple fees on checks and automatic payments that got resubmitted after bouncing. So this isn't a closed historical chapter the way some bank fee stories are. It's closer to an open question that banks are still being asked to answer, one at a time, bank by bank. You may have heard a different, older overdraft story before this one, that banks used to quietly reorder your purchases, processing your biggest charge of the day first on purpose so that more of your smaller ones would bounce and rack up separate fees. That was real, and it cost banks billions in settlements. Bank of America alone paid $410 million over it back in 2011, and Wells Fargo paid another $200 million or so around the same time. But that's a different trick from an earlier era aimed at a different set of transactions on the same day, not one payment resubmitted after it already failed. Most large banks moved away from that specific reordering practice more than a decade ago. What we're describing here is a narrower, more current thing. One payment resubmitted and billed twice, and unlike reordering, it hasn't fully gone away. So what does this actually cost if it happens to you? The average overdraft fee at banks nationally was a little under $27 in 2025, and some banks charge as much as $37. Charge that twice on the same failed $40 payment, and the fees alone cost more than the bill you were trying to pay in the first place. Here's the part that matters most if you're watching this hoping to avoid it. Not every bank works this way anymore. Some banks decided the entire overdraft fee business wasn't worth what it cost them in customer trust and dropped it. Ally eliminated overdraft fees completely back in 2021. Citibank followed in 2022. Capital One stopped charging them the same year, choosing to simply decline a payment it can't cover instead of charging you for the attempt. Other major banks, meanwhile, still charge their standard fee, one attempt at a time, and it isn't a small line item for them. The country's largest bank alone reported over $1 billion in overdraft-related fee revenue in a single recent year, with another major bank not far behind it. There's no single public scoreboard ranking every bank's current policy on repeat fees. The honest answer is that it genuinely varies from bank to bank. And the only way to know for certain what your own bank does is to ask them directly or read your account agreement. There was briefly a federal rule aimed at fees like this. In December of 2024, the Consumer Financial Protection Bureau finalized a rule that would have capped overdraft fees at $5 for the country's biggest banks. It was supposed to take effect in October of 2025. It never got the chance. The Senate voted to repeal it that spring, the House followed a couple weeks later, and the President signed the repeal into law in May. By later that same year, overdraft and related fees at the banks that report this data had climbed back above $12 billion for the year. Whether that increase was actually caused by the repeal or would have happened anyway isn't something the numbers alone can prove. What you can control is smaller, but it's real. The most useful thing you can actually do is check your own account agreement or call your bank directly and ask one specific question. If a check or automatic payment gets returned and then presented again, does the bank charge a separate fee for that second attempt? And if a payment does fail once, you often have a window to step in yourself, pay it directly or move money over before it gets resubmitted and billed a second time. That one question will tell you more about your own risk here than any national average ever could.